Thanks for staying with us on SABC News. Now, PWC has released an analysis of major banks' performance last year. Rivaan Roopnarain, who's PWC Africa's banking and capital markets partner, joins me now. Thanks so much for your time on SABC News this afternoon. Just please describe the operating environment in 2022, when you were doing and looking at those banks, and how that affected customers and the banks as well.
Yeah, good afternoon, Zinga, and thank you very much for having me. I think what we see for the reporting period to December 2022 is a really strong set of results from South Africa's major banks, with combined headline earnings passing 100 billion rands for the first time. I think, as you mentioned, the operating environment is very important, and it's important to note that these results come against the context of a challenging macroeconomic environment, which our banks have navigated. This includes the conflict that is ongoing in Russia and Ukraine, which has caused challenges to supply chains. We've got an elevated inflationary environment globally, and then you've got a South African economy that is under strain given unprecedented levels of load shedding and low growth. So with that as the backdrop, there are some significant drivers that have contributed to the results that we see in this period, and they include very strong interest income growth of around 15%. That comes on the back of the heightened interest rate environment. The major banks enter the year with larger balance sheets than any prior period, so that means the base on which to earn revenues was larger. I think importantly, they also did more with customers in the form of lending, transacting, and remitting. And we see the effect of that coming through in very strong non-interest revenue growth of around 13% in the form of fees and commissions. So in a nutshell, those are the key drivers that have contributed to the results in this period.
Okay, so across retail, corporate banking and businesses franchises, there was what you've described as robust growth. Is that a low base story because the economy was doing so badly in 2020 and 2021, or is that a resilient story?
I think it's a combination, Zinga. To be honest, the banks have been quite deliberate coming through COVID-19 about how to refine their strategies and to make sure the strategies are fit for purpose. I think what you see in the set of results is some cyclical factors, like, for example, the heightened interest rate environment, which certainly helps banks initially and gives rise to this effect of positive endowment, where the assets reprice faster than the liabilities funding them. On the other hand, I think you see the deliberate execution of well-crafted strategies. Mm-hmm. And there are some elements that are at play in the strategy determination. For example, a very distinct focus on digitally led banking, ensuring the customer experience on the front end and on the back end is superior. And I think all of those things in combination is what has given rise to the results that we see in this period.
Rivaan, you've spoken about a very challenging environment that we were operating in as a country, and I would say as the world economy in 2022. How did inflation affect the credit market in 2022?
So inflation affected the credit market in two ways. On the one hand, the pace of inflation was quite quick. We saw the repo rate effectively double in 2022 in a very short period of time, from around 3.7% to 7%. What does that mean for consumers? It means that the interest they pay on mortgages, on vehicle and asset financing has increased. Now, what we haven't seen as a result of that inflationary pressure on the consumer is the associated impairment charge on the loans and advances. Typically, there's a time lag to that, so you probably will see some of that coming through in 2023. But certainly, Zinga, I think you had a tale of two halves. In the first half, we saw from the National Credit Regulator very strong demand for credit by the South African consumer coming out of the COVID period. On the other hand, what you saw in the second half is a very sharp increase in inflation. And that obviously puts pressure on the consumer, which we will probably see come through the credit impairment in the next reporting period.
I mean, let's talk then about the next reporting period in the future. What's the outlook for 2023, and how, if in any way, will last week's scare about banks affect that? All right, so...
My apologies, I may have lost you for a moment.
No worries, it happens. So let's talk about the outlook for 2023. You were speaking about the future and what's coming next. What's going to happen, one? And there was that big bank scare last week in the US, and I think it trickled into most markets. How, if in any way, will that scare about banks affect us here?
Sure. I think let's deal with the second part of your question around the developments in the US. I think it's necessary to understand that the nature of the bank, SVB, as well as Signature Bank, It's a fairly unique business model in the sense that it was heavily concentrated to lending in the technology sector, and in particular to startup and venture capital activity. So we're not talking about typical Main Street banks. You saw that the bank there was exposed to rising interest rates, which saw the asset values becoming depressed, and then they ran into liquidity issues over the course of last week. In contrast, when you look at our major banks in South Africa, what you see is that they are widely diversified from a sector perspective, from a segment perspective, and then also from a geographical perspective. So you've got quite a different situation in South Africa. I think we've seen consistently over time that our banks have got very strong balance sheets, in some cases even stronger than pre-COVID, with levels of risk provisions and capital probably as high as they've ever been. We've also got a singular prudential regulator in the form of the Prudential Authority at the SARB. In contrast, in the US, you've got a two-tier state and federal model. So I think the situation is quite different. But what we do know is that banking crises for one bank invariably present lessons for all banks. We know that bankers are risk managers, and our bank management teams in South Africa have proven themselves to be rather astute managers of risk over time. So no doubt they will be reflecting on the lessons to be learned from Silicon Valley Bank, from Signature Bank, as these events continue to unfold. Zinga, when it comes to the outlook, as we look ahead, we see that the financial environment is once again entering a period of volatility. You see that on the interest rate fronts. We see inflationary concerns, although there's an expectation that that will moderate in South Africa. Given the nature of banks and what they do, their financial performance is invariably linked to the performance of the broader economies and the environment in which they operate. In South Africa, we heard all of the major banks share their reflections around unprecedented levels of load shedding, talking about the slow pace of structural reforms. So these will be things that will be on their mind as we enter 2023. And no doubt it's a period of continued uncertainty.
All right, Rivaan Roopnarain, PWC Africa's Banking and Capital Markets partner, joining me there. Thanks so much for giving us insight into what's happened last year and what could be happening with banks in the future. Really appreciate your time.